Recording in progress.
Hey, yeah, so as of 2025, there are 31.7 million business owners inside the United States. And you know what most of them are doing? So they're setting up LLCs. Now, in fact, 1 out of every 6 taxpayers who walks into my tax office owns an LLC. Now, I personally have owned about 7 different LLCs over the course of, the last 10 years. And I've helped a very significant number of people set up their own LLCs as well, especially for my clients. Now, here's the thing. LLCs are the most popular business structure out there, yet most business owners who have them aren't even sure if they should have one in the first place. Now, in today's video, we're going to walk through what you need to consider before setting up your LLC, and I'll point out the most common mistakes I see most business owners make. So mistake number 1 is not knowing your type of income. Mistake number 2 is setting up an LLC after buying real estate. Mistake number 3 is not using your EIN for income and expenses. Number 4 is not understanding which forms to file. And mistake number 5 is not knowing how to reimburse yourself. So we're going to cover each one of these in detail. Awesome. So mistake number 1, not really understanding the type of income that you are receiving. Now, this one is huge, okay? Because there's a number of different types of income, right? There's ordinary income, passive income, portfolio income, and your income type is going to influence your business structure decisions. So, for example, So in terms of each one, even before I go a little bit deeper, ordinary income, this is like W-2 wages, your 1099 income, and you're basically working on it very actively. Next is passive income. So this can be stuff like rental income. It can be stuff like interest from savings accounts. You're not actively working for it. The next type is going to be portfolio income, right? So capital gains, like when do you sell your stock or invest in property? And this really matters because the type of income that you earn is going to affect whether an LLC is the right structure for you or if you should be looking into more of an S Corp or a C Corp. So when it comes to passive income, okay, so we'll give an example like real estate investors. If you're earning passive income from rental properties, an LLC might be perfect for you. And here's the reason why. Because passive income is not subject to Social Security or Medicare taxes, unlike ordinary income. And that's why real estate investors often choose LLCs over S Corps or even C Corps, because they don't need to worry about self-employment tax on rental income. Now, if you're running... Next thing is going to be ordinary income. Now, if you're running an Amazon store, Etsy, or even automated e-commerce business, the truth is, even if it's semi-automated, you likely had to do a lot of work to get there. So that's like building the site, that's set up the ads, it's hiring help. That falls into ordinary income, even though online gurus will say it's a passive income stream, okay? And ordinary income is subject to 15.3% self-employment tax, federal tax, and state tax. So if your business relies on your labor, you're dealing with ordinary income, not passive income. So I just want you to be aware of that because not a lot of people are, and it really trips people up, especially comes tax time, because they're thinking that they're going to be, making these huge passive income, and what happens is they're taxed so high that it doesn't really make a lot of sense for them to even do it because they're not really making that great profit margin in the first place, and now you're even reduced and stripped even further. Next thing is going to be portfolio income. So if you're selling stocks or real estate at a profit, you're dealing with capital gains, which are going to fall under portfolio income. Now, this mostly applies to investors, but knowing this category exists can help you figure out which business structure can make the most sense to you, because it's not that hard to go from having a really significant amount of ordinary income to all of a sudden you start you hear about this hot new stock tip, you start investing, you make a good amount of money, more than what you were expecting, and now you have to pay extra taxes. And if you have a very strategic tax strategy you followed in years past, it messes things up. How do I know? It happened to me, right? There was a year where I was really, I got on Reddit and I had seen all these different stock tips and I was following all this stuff, and I was doing a little bit of swing trading, and I made a really good amount of money. But comes tax time, I was not able to use a lot of the old strategies I used to use to do it, and I didn't know that at the time. That's why I started learning this tax strategy stuff was for my business first. Excuse me. So the next mistake I see, number 2, is buying real estate before people create the LLC, right? Now, I get this all the time. So someone will call me and be like, Bryce, I just bought a rental property. Like, should I put it into an LLC? At this point, we're already behind the 8 ball, right? It's much better to set up an LLC before we buy the property so the LLC can be listed as the buyer on the title. Now, why is that important? It's important because your name will not show up on public record. You'll get the liability protection from day one. You'll avoid problems like the due on sale clause that can trigger if you have to try and transfer the property later, right? And if you're buying the property through an LLC, you can give that LLC time to build credit and income history. That way it can actually qualify for loans on its own, right? That was one thing when my parents were first starting out. They were having to go and get personal loans on all of their rental properties because they just didn't have an LLC beforehand. They didn't have any business credit, so the banks would not, give them business credit, right? And that's a common thing for a lot of investors, especially a lot of new investors, especially if you're doing like courses online on that kind of stuff. Now, mistake number 3 is not using your EIN number properly. Now, you went through all that effort to set up your LLC, but if you're still using your personal bank account, it's like, we have to fix that. Just being honest, we have to fix that. Now, your EIN number is like your business social security number, right? And it's what you use to open a business bank account, apply for business credit, and keep your finances separate. So if you don't use your EIN, you could miss out on loans, grants, and programs like PPP or the EIDL. Like a lot of business owners missed out on that because they just literally were not using their EIN. Everything was under like their personal stuff. So what I would do is I would actually go to your bank, open a business account using your EIN, and then start running all the income expenses through that account like from day one as fast as you can. Next mistake I see, number 4, is not knowing which tax forms you need. And like this one's a little tricky, right? Because honestly, most CPAs just don't sit down and explain this stuff to you. But like, here's a quick breakdown. So when it comes to Schedule C, this is for single member LLCs. It generally goes inside of your personal 1040 tax return and lists your business income and expenses. Next, like a 1065 form. Now, this is for like partnerships and multi-member LLCs. Now, this is a separate tax return for the business. Next is going to be your K1 form. Like if you're in a partnership, this is the form that the business sends to each partner so they can report their share of the income on their personal return. Next thing is going to be your SS4 form, and this is the form that you file with the IRS to get your EIN. Next thing is going to be your W-9 form. Now, one thing to know is like, when it comes to W-9, it's just so you can like, if you pay your contractor more than about $600, if you pay your contractors more than about $600, you need them to fill out a W-9 so you can issue them a 1099 at year's end. Now, knowing these forms will save you time, stress, and a potential tax headache. Now, next thing is going to be not knowing how to reimburse yourself properly. Now, let's say that you paid for business supplies with your personal credit card. Like, how do you move that expense into your business's books? The answer is an accountable plan. So this plan allows you to reimburse yourself for personal expenses that were truly business related, legally and correctly. Now, if you don't set this up, you're leaving deductions on the table and potentially misrepresenting your income. So I would not wait. Just learn how to set up an accountable plan or talk to a tax pro to help you right away. Okay? So there you have it. 5 big mistakes to avoid when starting or running your LLCs. Right? Number 1, know your income type. Number 2, set up your LLC before you start buying real estate. Number 3, use your EIN to set up your business accounts. Number 4, understand different tax forms. Number 5, know how to properly reimburse yourself. Now, if you found this video helpful, like, comment, and subscribe so I can keep making content that keeps, making you a savvier taxpayer and a better business owner. And also, if you want some help reducing your taxes and running your business optimally from a tax perspective, book a call with me to see if I can help you reduce your taxes and make sure we can keep as much of that hard-earned money as you possibly can. I'm Bryce Tubbs, and I will see you inside of the next video. Take it easy. Talk to you soon.